Welcome back. You're still watching Finweek, Money Matters. Remember, this is the show that helps you manage your finances. While it certainly has been a volatile year for the oil industry, with prices for Brent crude swinging from a 12-year low of around $27.88 US dollars a barrel to a high of $41.58 US dollars a barrel. While we've seen the oil back to around the $40 US dollar per barrel mark this week, it really does remain a very far cry from the 2008's peak of around $145 US dollars a barrel. But while low oil prices are traditionally seen as a boom for the global economy, the IMF says the expected shot in the arm for the globe is yet to materialize. And in South Africa, the weakening of the rand against the dollar has largely offset any of these inflationary benefits of lower oil prices. But let's get some more insight into all of this. And joining me now to discuss the oil and the economy is Chris Bredenhann. He's a partner at PwC, and we're also joined by Christie Viljoen, economist at KPMG. Chris, let's start off with you and go back to basics, looking at the fundamentals. The lower oil price that we are currently sitting with since those highs that we saw in 2008, as I've just mentioned, is it merely just based on an excess in supply?
Yes, I think a lot of the lower oil prices could be attributed to the supply and demand balance and impacts that technology and the onset of shale oil and shale gas have had on the industry. As we sit here today, I think we're looking at 2.2 million barrels of oil a day excess of supply over demand, and that obviously has an impact on the oil price and then taken together with the state of the global economy and slowdowns in Asia as well, that it impacts the demand side, leading to lower oil prices.
Christie, a lot of South Africans this week on Tuesday evening were lined up at petrol stations trying to fill up their cars. We did see petrol price going up by 88 cents a litre. We've been talking about this lower oil price. Why is it that we're paying more for petrol, and what are the inflationary implications for this?
Well, the two factors that's basically counting against South Africa is firstly the rand. The oil price has dropped significantly, but so too has the value of the rand. The other factor is that the component in our fuel price that is that constitutes the actual product coming into the country, it's only about just over 5 rand a litre, and we pay 12, 13 rand a litre. The rest are taxes and levies. So there's a small component that would be of benefit, and we're not seeing that benefit at this stage.
Chris, let's come back to you. I know that you've released a report on the energy sector. So what advice would you have for clients that are in that particular industry?
I think the impact has had the lower oil prices have had different impacts on companies. If you're in a situation where you are you have sufficient funds and you can enter into mergers and acquisitions, the time is right to look at those and make strategic investments. I also think one of the impacts of the lower oil price has been significant pressure that has been placed on oilfield services companies and companies providing services into the industry. And as a result of that, the costs of seismic surveys and the cost of drilling have significantly reduced. So that also creates opportunities for companies, all companies, to say, where do I go and explore? Can I make use of the opportunity of lower exploration costs potentially to do that? And I also think finally companies must have a clear vision of where they want to go to and then execute upon that. And part of that execution could mean I need to partner. Some of it might mean I need to make better use of technology. So there are a number of opportunities that arise out of the lower oil prices when you're in the upstream space. When you're in the downstream space, I think it creates opportunities for refiners to look at better margins as well, as we've seen, because we've seen that in the international oil companies' results, where there's a common theme around the downstream segment of their results bolstering and providing some positive result as opposed to challenges being faced in the upstream space.
Chris, let's come back to you and get an economist's view. We spoke, Christie, we spoke very briefly now just about the fact that the low oil price hasn't really translated to the consumers. What do you think is different about the slump that we're currently going through now to what we may traditionally expect?
Well, traditionally, if you look at a global experience, you'd expect low oil prices to give you a little bit of a relief in inflation, maybe a bit of deflation even. Now, what we have in the major markets at this stage, let's say North America, Europe, China, we already have very low inflation. So a change in fuel prices there is not having such a big effect as you would have expected, let's say in 2007, 2008, when we previously had record high oil prices and the oil prices came down. So that's why the IMF commented earlier this week that the world economy is not really seeing a benefit from lower oil prices. In the case of South Africa, we would have had a benefit if the rand was not as weak. So at this stage, we are sort of on the opposite end of the coin, where we have high levels of inflation, and every time that we have adjustments in the fuel price, this inflation gets pressured higher. In the case of this month's upward adjustment, it included quite a significant increase in fuel levies and taxes, which we usually get in April. But the bottom line is, even if we get them, an increase of 80, 85 cents at one stage, and then expectations of in the next few months could go up by the same margin, it's definitely not good news.
Chris, coming back to you and looking at the investment environment, earlier this year the government said that they would be issuing exploration licenses. What do you think investor appetite is going to be like, and maybe even more importantly, do you think this is still going to happen?
The lower oil price obviously impacts on the appetite for investment in what we would typically be an upstream play here, and for a view on or understanding what that impact might be or the appetite might be, I think there are one or two things that need to be considered. Price is one element of it, and we've spoken about that. Another element around impacting the investment appetite specifically in South Africa is the regulatory environment, and we've seen the Mineral and Petroleum Resources Development Act being referred back by the President and being revised with a lot of input being provided by the industry to aim to make the industry more attractive for investors, and I'm quite positive that I think that we'll see a positive change and a more investor friendly environment for that. That then leaves us with, in South Africa, one of the biggest oil and gas plays that we've been anticipating for a number of years has been around shale gas and, onshore in South Africa, and that has been plagued by challenges from an environmental point of view on the one side, and now more recently by challenges around the MPRDA and then the lower oil price. If licenses for the shale developments are to be issued, there's still a question mark then on exactly when exploration activity could commence, because of on the one side low oil prices and the appetite that players might have for that, and on the other side any environmental challenges that it might face. There's been a lot of talk around at what price levels the shale plays might be viable. And if you look at some information that the EIA, for example, have published around new supply of oil and gas, we're looking at in North America, for example, at levels of $45 to $70 for shale to be viable. So we a little bit out of the money still at this point in time.
Chris, we're going to have to leave it there on that particular point, because I definitely want to get to Christie and get some closing comments there. Sure. Unfortunately, we are running out of time. Christie, the 17th of April is what a lot of people are looking ahead to, especially with regards to movements in the oil price. Do you think that we will be seeing a production freeze come that meeting in Doha?
Given recent history, I want to say no, I don't think it's going to happen. Agreements on freezing production, it's been in the news for, let's say, the past 6 months quite a few times, where some of the biggest producers have come together and said, well, we'll freeze our production if this country does it, if this country does it. And they quite literally name who they want them to join. And basically, it's sort of fallen flat most of the time. Saudi Arabia is obviously a big play in this regard, but the problem is you need a lot of the big countries to agree on this, and at this stage they haven't been able to get to a consensus. I don't think with less than 2 weeks left they're actually going to reach it, unless they work really hard at this. I'm not going to put my hopes on it just yet. We'll have to see what happens in the next few weeks.
Right. I guess we'll also be watching that particular space. Thank you so much to my guests joining us live from Cape Town, Chris Bredenhann, a partner at PwC, and Christie Viljoen, economist at KPMG. That's it for this week's edition of Finweek Money Matters. Remember that you can go and get yourself a copy of the magazine. It is available at your nearest store. Alternatively, you can just go online and have a look at those articles. And until next week, have a great weekend.